Thank you for watching the CEO Barbecue. My name is Antonio, and today I'll be looking for gold and copper in Wyoming, or well, in the US, but so Wyoming, as well as Idaho and Nevada, together with Luke Norman, who is the chairman and co-founder of US Gold Corp. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, US Gold is listed as really US Gold, so USAU on the NASDAQ stock exchange. For a change, we're talking about a US listed company here, where over the last 3 months, an average of about 285,000 shares have traded daily. The stock's 52-week high is $11.75, and its 52-week low is $3.80. With a market cap of 135 million US dollars and 12.6 million shares outstanding, today this is a $10.72 stock with a 50 and a 200-day moving averages at respectively, and I'm going to be rounding up, $9 and $7. 4.5 million warrants and a 500,000 options added to the shares outstanding leaves us with 17.6 million fully diluted shares, meaning an increase of about 40% can be expected if the options and warrants get exercised, which would then result in about a 30% ownership dilution if, and that's always a big if, but if all dilutive securities get exercised. To give you an idea, the 500,000 options are all employee held and they're all in the money as of today, although the majority of them don't expire until 2029. The warrants, they've got multiple different strike prices, the vast majority of which also already in the money as of today, but over half of them don't expire until, again, late 2029. I don't have the full ownership breakdown available right now, but I do know that Eric Sprott and the Terra Capital Natural Resource Fund out of Australia own shares of this company. So hopefully that's something Luke and I can discuss later on in the conversation. Moving on to the financial statement, it is a 10Q in this case, since this is, again, a US listed company. So the latest 10Q shows us the numbers as of January 31st, 2025. The asset side of the balance sheet at the time held just over $10 million in current assets, most of which, so $9.1 million to be specific, was in the form of cash, pursuant to a $7 financing with a $9.50 3-year warrant, which closed in December of last year, bringing in about $10 million in cash. The liability side had in total about $8.5 million on it, although about $7 million of that was accounted for by a warrant liability, so not actual debt. The remaining $1.5 or $1.6 million are split about halfway between current and long-term liabilities, with the $800,000 worth of current liabilities accounted for mostly by account payables, and the non-current liabilities accounted for mostly by an asset retirement obligation and a deferred tax liability. So again, no real long-term debt. Moving on to the P&L for the 9 months that ended on January 31st, US Gold recorded about $10 million in operating expenses, where the largest chunk, specifically about a third or 33%, was accounted for by professional fees and consulting. 28% was accounted to general and administrative, and almost 19% was accounted by compensation and related taxes, leaving about 20% to be accounted for by exploration costs. So your exploration to non-exploration spend ratios here about in a 20-80 fashion split, meaning about if you flip that around, it would be a 4-to-1. So 4 times as much money was being spent on running the company than what went into the ground during the last reported 9 months, which is about in line with the same period of last year. In terms of non-exploration spend, that places US Gold Corp at an average of about 870,000 US dollars per month, which is about a 70% increase year on year. Of course, I'm not infallible, try as I may, and I might be making mistakes in my reading or interpretation of these numbers. So please head over to the company's website and analyze their financials for yourself before moving on. Talking about moving on, I think that's about enough accounting for today. So moving on to their projects, US Gold has three of them, as I mentioned earlier. All three are in the US, specifically Wyoming, Idaho, and Nevada, with the flagship asset here being the CK Gold Project, where CK, by the way, stands for Copper King. But the project's actually a bit more gold. I believe it's about 60% gold, depending on the metals prices. And it is located about 20 miles west of Cheyenne in a corner of Wyoming, really, because it's just about an hour and a half drive from Denver, Colorado. It's a 100% owned advanced stage project with a recently completed pre-feasibility or a PFS study on it. This is a proposed open pit asset with a 10-year life of mine, which is expected to result in about a 1.1 million ounce of gold equivalent material produced, with an average equivalent production of about 110,000 ounces. Building it is estimated to cost $277 million in pre-production capex, with $13 million in sustaining capex and $21 million of closure costs. If the mine is operational and with the assumption of $2,100 per ounce gold price and $4.10 cents per pound of copper realized over the LOM, CK is expected to deliver a total of $556 million of post-tax free cash flow, which, if you DCF that to today, would be a $356 million post-tax NPV 5. Next up is the Keystone project in Nevada. This project is still in the exploration stage, so it is much earlier on in the Lassonde curve with some historic work, but no major discovery on it yet. And the company hasn't been spending much time or money on it recently, as the focus, of course, has been on CK. But hopefully Luke and I can touch upon Keystone later on in the conversation as well. And then lastly, there's the Challis Gold Project in Idaho, central Idaho to be specific. It's got some historic work on it, but again, little to no work or recent work on it by US Gold Corp. So hopefully a brief update on the plans there as well as we progress through the conversation today. Of course, for this to actually become a conversation, I will have to shut up already and Luke give you the word. But first of all, thank you for being here today.
Yeah, thank you, Antonio, and thank you to anyone who's taken the time to watch this.
The pleasure is all mine, of course. But since this is your first time on the CEO barbecue, and although you're not the CEO, we'll still have to go through a couple of obligatory smell test questions first.
Cool.
Starting off with yourself, who are you and why do you think you're the right man for the job?
Certainly. Again, Luke Norman. I started my career actually at the prime age of 16. I worked at a small brokerage firm in Wellington, New Zealand. It was actually of a good size. The chairman of our company was actually the chairman of the New Zealand Stock Exchange until 1987. There was a flash crash, and I actually took out the capital of Ordo Conagrieve, the brokerage I worked for at the time. Anyway, many years later, well, several years later, I moved to Canada, and I started working at a firm called Canaccord Capital. So Canaccord specializes in, amongst other things, wealth management. Aside from that, specializes primarily in financing junior resource-based companies out of Vancouver. So myself and my then employer at Canaccord, his name was Ian Gordon, we embarked around 99, 2000 into the myriad of junior mining companies out there, and we were financing them, upwards of 70 plus junior mining companies we financed, traveling throughout Europe and throughout North America. And as the dust settled into around 2004, 2005, I took Ian aside and I said, look, we've got all these companies that we've put all these people invested into, and I just don't feel that always the management have the right focus or are getting things done. I was always a bit cautious, and still am to this day, of public junior companies being run by the geologists themselves, because they get a little bit too attached to their projects or a little too attached to their concepts. So I again took Ian aside and I said, I think I'm going to leave the brokerage side of the business, and I'm going to help some of our more exciting prospects do a better job in the marketplace, conserve their capital better, ensure that the management are accountable and are concerned are aligned with the shareholders, because if management are not aligned with the shareholders, then clearly the shareholder is never going to do very well. So my first soiree was into a company called Royal Standard Minerals, and it was a disaster. Uh, Eric Sprott was the largest shareholder, but management were not aligned with the shareholders. And so I came in, I tried to clean that up. It was pretty much impossible to do because, you have to go to battle or go to war against basically a treasury as an individual. It was very difficult to do. What I did end up doing was convincing them to uh, divest of one asset, and it was called the Railroad Project. And from there, I took Railroad. I joined forces with a gentleman by the name of Jonathan Ord, and we started Gold Standard Ventures. Gold Standard was a hugely successful Nevada-based exploration company. So my background is really about cleaning up broken messes, an understanding of capital markets, and ultimately being acutely aware of the fact that I am the steward of my investors' capital. And so when you look at US Gold Corp, 12.4 million shares outstanding, only with obviously fully diluted, that number is in the low 17s, as you mentioned. But yeah, with only 12.4 million shares out, I think that can attest to my stinginess and my understanding of tight share structure.
I do see that you hold multiple positions at the same time, though, right now, some of which is an executive as well. How do you manage your time, and how much of your time is dedicated to US Gold Corp specifically?
So primarily, my focus is US Gold Corp, where I am the executive chairman. At Silver One, I'm non-executive chairman, so I'll get a call from Greg Crow, and he'll say, "Luke, I want some help with this, or we need to make a decision on this project, or we should look at raising capital." And I will come in and work alongside of him as he needs me, or if we need, obviously, all the corporate governance side of things, we focus in on that. But as an actual day-to-day operations, my primary focus is US Gold Corp. And then I am the CEO of two other companies, which are, were essentially shells. One is actually moving forward now with a very exciting project in Bosnia, but the chief operating officer there, Jeremy Crozier, he lives in Europe. He's a very, very good operator. So again, I'm more of a helper than I am the head right now.
What about your CEO? Does he hold multiple roles as well?
No. So George B essentially came out of retirement. So his surname is B-E-E. George, prior to working in any of the junior space, worked amongst others, Kinross and ultimately Barrick. So his first job at Barrick was actually turning what became their flagship asset, Gold Strike,
That's right.
as he phrases it, turned it from a hill to a hole. So he made Gold Strike. He put Gold Strike into production as the mine manager, starting that in 1986, all the way through to his end of tenure with Barrick, was building the largest operations in South America. So to say George knows how to build a gold mine would be a gross understatement. And he is working primarily focused on US Gold Corp and our CK or Copper King asset in Wyoming.
Hmm. Looking over at your technical team, do they have specific experience for the task at hand as well? Have they worked in similar geologies in similar parts of the world before?
Yes. Short answer, absolutely. So Kevin Francis, who leads our technical team, previously with Echo Bay, amongst many others. Echo Bay actually had a really exciting project in Manhattan, Nevada back in the day that is now in Scorpio Gold. But Kevin Francis has a lot of experience as a mine geologist, and that's really what this project needs, because we are at the doorstep of being a mine.
Right. Well, and that's definitely something we'll talk about, and I think your team is going to come up multiple more times here, Luke. But what's the let's talk about the insider ownership here for a second as well. 12.6 million shares outstanding. How much of that is in the hands of insiders and management?
Just around 20%. But outside of pure insiders, we have, I don't want to say friends and family per se, but some very closely associated investors to the company. that would bring in about another 18 to 20%.
Mm.
But directly in relation to your question, around 20%.
I know Eric Sprott's in this since your latest financing as well. How much of that financing did he take?
Eric took down about 15% of that issuance. It was his first soiree into our story. He was actually really surprised to hear about us, was surprised that we existed and he was not aware of us. And Antonio, that was actually a little bit ironically by design. We spent the last 4 years engineering and permitting, and the last thing we wanted to do was ruffle the feathers of the NGO groups and create too much of a concern or a head spin around what we were working towards at CK from a development and engineering perspective. Funnily enough, fast forward to today, well, in November of last year, and we actually did not attract any formal objection to the project, but we had kept ourselves kind of flying under the radar. So it wasn't until the end of November last year that I finally got to go and meet with Eric and introduce him to the story, and he gave us an order as such.
That's something we'll talk about as well. The environmental review process and everything else. Water is also something that I have on my list here, so we'll get to that. What's the average? You said 20% is owned by management and insiders. You're a co-founder of the company, so assume you got some shares in relation to that. Is the rest bought and paid for in the open market or financings? What do you think is the average
Oh
price of
yeah,
the shares that you
yes.
own?
I've participated in multiple rounds of financing.
Hmm.
The irony is, I came in as a director and ultimately chairman. Uh, I should know this off the top of my head, but it was around 2 years ago. It was within the last couple of years. Prior to that, I was just, my business card just read co-founder and consultant to the company. Um, I wasn't a reporting insider, but I've participated in multiple rounds of financing throughout the life of this company. Now, the last financing we did, I wasn't actually allowed to participate because it was done at a discount to market. So it's slightly different in the US. In Canada, our investors look to us to be alongside of them, to be aligned, to be participating in these financings. But because it was done at a discount to market, we were $7.75 when I announced a $7 unit. Yeah, I wasn't able to participate. So long answer, but ultimately, yes, my shareholder, my average cost base on my stock is in the double digits somewhere, and I'm too afraid to look back and calculate it because I don't want to look in the past. I want to focus on the future.
Do insiders typically buy in the open market as well? And when was the last time you or the CEO or anyone else from the executives picked up some shares?
The last one to actually buy shares in the market was either myself or George B. Nominal amounts now, but we are allowed to purchase in the market. The challenge is you are constantly under different blackouts and because you're working on news material and non-material. And the US is just such a really strict marketplace, and rightfully so. I mean, you need governance, and everyone should be co-aligned with shareholders, and shareholders' focus being their main obligation. But it's a safer place to stay out of the marketplace now. I have a good, healthy position in the company, and now I just want to make it worth as much as I can possibly make it worth.
I do have a question about the Nasdaq that we'll get to as well. So making a note not to forget that. Do you or any of your other colleagues, executives, directors own a royalty on any of these projects personally?
No, we do not.
That's a short answer, and that's how I like it.
Yes.
But that about does it for the initial smell test. I want to talk more in depth about the assets here, understanding that CK is the start of the show. But what's the business plan for US Gold Corp as a whole from here on out? I mean, you're at the PFS stage, as I read earlier from my notes here with CK and early on with the other two projects. So, are you actually looking to build CK yourself and then do exploration on the other two assets, or are you kind of gearing up for a sale sometime soon?
So it's a multi-part answer, and I'm going to give you a little bit of history just to help us better understand my answer. So initially, when we started US Gold Corp, we went public in June of 2017. Our flagship asset at the time was Keystone, and Copper King was next, and then Challis. Oh no, we didn't even have Challis at that moment in time, excuse me. So the key focus was Keystone, and money was really hard to raise. So this was kind of my 2.0 attempt at, I told you previously, I had the railroad project, which John Ord and I started Gold Standard Ventures. Gold Standard continued to move ahead, but it didn't need me there anymore. It had a very strong independent board. Most of the exploration excitement was over, and they were going into pre-development. So I chose to step aside and start US Gold Corp. And the plan was focus on Keystone, make another big discovery in Nevada, and make myself and my shareholders a potload of money. Well, the excitement in exploration, and particularly in Nevada, started to wane. Not just not just the gold price and the lack of liquidity in the gold sector, but also the combination of Newmont and Barrick joining forces with Nevada Gold Mines meant that the the whole driving force for wanting to make exploration or make a discovery in Nevada had been diminished somewhat. You know, the competitive tension had been diluted by these two joining forces. So I was at a bit of a loss, and my plan at the time was to sell CK to fund exploration at Keystone. But as every smart director or person, financial person in my, in a position like mine should do, I brought in an outsider to assess what Copper King was really worth, whom might be a good purchaser for the project, so we can make sure we got the most bang for our buck. And the person I went to was George B. So George had no association with the company. We knew each other from other business, and we supplied George with about, I think, $20,000, and he went and brought in some outside consultants, and they did a full study, an internal report on Copper King. Well, they came back to me and the rest of the board about, I wasn't even a director of the company at the time again. They came to me and to the board of the company and said, you're crazy to sell this asset. It's a cash cow. Heck, we'd like to get involved. We'd like to develop this. So we pivoted, we consolidated the stock on the company, we turned it completely on its head, and went from being an explorer in Nevada to a pre-developer in Wyoming. So we brought in George as a CEO. We made some other minor board changes, and that's the company that you see today. So George came in, joined the team in August of 2020. So from August of 2020 to basically that same time in 2024, we've managed to take this from a loosely defined PEA resource project into a fully permitted reserve category pre-feasibility study heavy. I say that because we're pretty much at feasibility. We've just got a little bit of our engineering team have a little bit more desktop work to do. But yeah, it's been a dramatic change in the company. So I know that's a very long answer to your question, but I hope that covered all the bases.
Well, but do you want to sell it or do you want to build it yourself?
Oh, yes, I guess that's an important bit. We fully intend on building this. It's just the right stuff, the right place, and the right time. It's such an easy build, Antonio, and that's where people get really hung up when they look at where we'll go later on in the conversation, I'm sure. People look at our CapEx numbers and they go, oh, that's far too light for a 20,000 ton operation. Well, when you're 20 minutes outside of a major hub township in a resource state like we are, it is a very easy build. I mean, it is crush, grind, float. We have Martin Marietta 3 miles to our south with an open pit identical to what ours would be like. But they're just harvesting and selling just the rock, not even without a mineral deposit in it. So I'm sure we'll touch on that shortly as well.
We definitely will. You did mention something interesting here that at first your idea was to sell CK and then it flipped. Why not do the opposite now? Sell Keystone and Challis to advance CK.
Uh, I don't think the dollar value we'll get out of them would be very high, but most importantly, and this particularly for Keystone. Keystone is going to be spun out of this company at some point, at some juncture. And it will be a standalone asset where it'll take its own dilution, but it's going to be a very big opportunity, big lottery ticket for our shareholders of record when that happens, because we'll all have a vested interest in Keystone's future.
I do want to maybe briefly touch upon it later on in the conversation, but this might be a good point to tell me more about the history of CK, which has been worked since the late 1930s, as far as I understand it. Who owned it before you, and how come you've got it now?
Well, the 1800s, it was discovered. It was discovered while they were laying rail line along through Wyoming.
Hmm.
And there's several old adits. And there was a main milling site, which was owned by Heckler. So the area, we're actually in what's called the Silver Crown Mining District. That's where Copper King is located. And so there is an old adit down into it, and it's very, very high grade mineralization. The shallow mineralization in and around the adit, it's not indicative of course, this lower grade, low sulfide deposit that Copper King is. It is definitely a low grade deposit, but hey, not all grades created equal because it's exposed at surface, of course. But yeah, so Heckler owned it originally, and we brought it from Uranium Energy Corp back in 2015. And I, at the time, my business partner was the one that was really headstrong about getting the project. And I, at the time, thought it was yeah, I guess it's an okay asset. I didn't know enough about it, and I'm not a geologist, so I left that to the smart people to work out, and look where we are today.
Why has it taken that long for it to move to pre-feasibility though? I mean, it's been a long while since it's
You
been
mean the
discovered.
asset kind of sitting in limbo before US Gold Corp showed up?
Yeah.
That's a really, really interesting question, and it's not that we can already look at the economics, and you and I will look at them closely today, I'm sure. It is the farthest thing from a marginal asset, and so for your listeners, marginal assets in hot markets, all of a sudden they look like they're going to work, but when you reality check comes in and the metal prices level out and other things and inflation catch up, marginal assets fail. When we did our deep dive, and obviously the engineering work we've done, and ultimately the pre-feasibility study, this project is the farthest from being a marginal asset, even though it is a lower grade deposit. And I think we have in our sensitivity chart that, it still operates and generates good cash flow down as low as $1,300 an ounce. So the reason why it was missed, Antonio, I can't tell you. I don't know why everybody just overlooked the viability of Copper King, because we look at it, you talked about our life of mine being 10 years, 110,000 ounces production per annum therein. That's only because that's all we drilled off. We were kind of cash constrained around our reserve, certainly not geologically constrained.
Mm.
What we didn't want to do was spend another 20 or $30 million increasing the size of the deposit by the way a drill, and then find out we couldn't permit it. That would have just been a silly mistake for everybody involved. So what we needed was a framework, an economic framework that was viable from a public company standpoint. So what would be viable? At least 100, we decided minimum 100,000 ounces of production per annum and a minimum of a 10-year life of mine. So once we got to those thresholds, that's when we started the permit process. So how this project was overlooked by not just the marketplace, but entrepreneurs and beyond is quite frankly, I don't have a solid solution or solid answer, but it just also lends itself to the fact that not all deposits have been discovered. Not everyone understands. There's a lot of good projects can be ruined can get confused by poor geologists, right? Or
Mm.
poor approach by management. People drilling the wrong way, misunderstanding the style of the deposit. So from that regard, on the history of CK, I can't tell you why it's still available, but it was, and I'm very thankful for it.
Well, first thing I thought about was Why is this the first time I heard about it during PDAC? Shout out to Terry Ann for introducing me to the story. She pulled me aside and she said, "This is George. Meet him. Look at this story." Um, Started looking into it, and the first two things I thought about was, oh, permitting was the first thing that popped up. We'll talk about
Yeah,
that. Second thing, I thought it might have been the metallurgy because although you describe CK as a porphyry, you're only still generating 67% gold recovery, whereas the porphyries that I'm used to typically seeing, they do between 80 to 95%. So
yeah.
what's interfering with the recovery process here? And is the metallurgy okay?
Yeah, it's actually a very low sulfide system. The metallurgy is really good, but the last thing we wanted to do is the state of Wyoming is very, very new to hard rock mining. Okay, we're the first hard rock gold mine in 100 years in the state of Wyoming, which is a pretty interesting factoid, given the fact that there's so much trona and coal and uranium and different things that are mined in state. But for hard rock mining, there's us, and then there's relevant gold looking for the next Quebec style greenstone belt. So when we got into deep diving on the project, there was no one else around us really to be able to reference. So we didn't want to go into a state that's brand new to hard rock gold mining and ever use the swear word cyanide, right?
Sure.
We were not going to go in there and try and heap leach this when it's near a state park. Within the state park are two water reservoirs. We knew straight away that we needed to go about this in a very contained and safe manner of mining. So we do dry stack tailings. There's no tailings ponds or any of that. We filter press. We reuse the water. Why? Because you're going to get onto water and grill me on that later, Antonio. I know, because water is a very, very protected commodity in this part of the world. So what we needed to do was find a simple form of extraction and try and maximize that. So that's why we're using crush, grind, and float. And unfortunately, there ends up being 300,000 ounces or so being left in our tailings. But so be it.
Is there nothing you can do with these tailings, like do a separate mine plan,
There
transport them
is,
to Canada or
absolutely.
something? I don't know.
There is, and we will, and we're going to explore everything. But what you don't want to do as a junior mining company is go out there and say, hey, we're going to try this brand new technology that no one else has tried, and we're going to get much better recoveries. That is a recipe for disaster.
Hmm.
So we just wanted to go with a surefire, proven track record, simple system. And we're already optimizing beyond that. So we're just using typical VAT flotation circuit right now, but we're already started working with Glencore Technologies on their Jamison cell technology, which I think is a bit aggressive to call it a technology. It's been around for 40 years, but that's basically enclosed cells where you infuse the reagent, the capturing reagent, by way of pumps, and you get these micro bubbles, and apparently you get much better recoveries and you use significantly less energy. So we're looking at optimizations like that. And then ultimately, yeah, if we could get into some non-cyanide based leaching process, there's all sorts of new technologies out there. Absolutely, we're going to explore it, and that gold won't be left. But again, you don't want to go out there and try and explain to Mr. Market that we're this junior and we're going to develop this ore body and we're going to use this brand new technology that no one's seen or heard of before. That is a recipe for failure.
Well, then, from the market perspective, does that mean that if you go toward, trying to extract the potential out of your waste rock, would the idea be to incorporate that into an updated mine plan, or would you go for a completely
Yeah,
separate mine
it
plan?
will be manifest along as we move forward through development and production.
Mm.
And I'll catch you there because you said our waste rock. So it's not contained in our waste rock, it's contained in our tailings. Now,
That's right.
waste rock is an entirely different subject that we are definitely going to talk to today.
That's right. And you're right. I actually do want to talk about the waste rock because apparently there's an opportunity in that as well. I saw it mentioned in your presentation. But might as well talk about it right now.
Yes.
What do you mean by there being potential in the waste rock?
So our economic pre-feasibility study, a permit to mine, a plan of mining, that's in all our presentation materials. It works along the assumption as it would any other mining operation. That is, we go in, we blast, we dig a hole, we crush, grind, float out our dry concentrate that we ship off site. We dry stack our tailings. We use waste material to buttress those tailings. Then post-production, and then we have 2 piles of waste rock. Post-production, we grind up some more of that material. We cover the waste rock with what's called riprap, which is finer, coarse aggregate. And then ultimately we topsoil and we turn it back into topography. And some of the rock goes back into the pit. Some of it is left on surface and topsoiled. So that is exactly how it's priced out and planned in our permit to mine. However, as we were doing the engineering around the project, we were looking for borrow source material. What's that for? Well, we need to put in foundations for our crushing plant, for our recovery plant, all the different work, road base, etc. So we decided we should run some tests on our own rock, because why go buy it? We're mining and harvesting rock anyway. Let's take a look at what our rock's like. And people are thinking, why would you have to test it? Well, it's a sulfide deposit. And what the last thing you can have is acid rock drainage. You can't have acids and sulfides leaching out from the rocks into Mother Nature, into drainages and different things. It's just, obviously, that's why we do environmental assessments, etc. Well, it turned out that our waste material is a very, very high spec aggregate source. And again, so we look 3 miles to our south, and there's Martin Marietta Materials, a $40+ billion materials company, pumping out a very similar granodiorite to our waste material and selling it for $20 to $25 a ton into the Colorado Front Range and by rail on Union Pacific Rail that follows the I-80 highway that they're located on. So then we look back and thought, well, we have 40 just within our mine plan, not considering the fact that the mine is going to last longer than just our feasibility study indicates, because we've discussed that, of course. It was just constrained by the amount of money we wanted to spend, not by the actual geology. So when we look at it, though, under that just 10-year mine plan, there's 40 million tons of that material sitting on surface for free. So we've got 40 million tons of $20 rock sitting on surface for free. So our intent now is to canvass some of the larger materials companies, construction companies. We've already been approached by one of the largest railways in the US wanting to purchase that rock. And we want to actually partner up with someone and say, look, you guys can have the rock. Why don't you do the contract mining and give us a huge discount on delivering us ore? Bring the cost down of production even further. I mean, all-in sustaining cost at $2,100 gold, as you know from our pre-feasibility numbers, is a very low $950 approximately an ounce. It's extremely low relative to peer group, right? Well, we believe we can bring that number even lower just by sourcing out, selling, horse trading our waste material, which is, again, highly sought after. Why is it highly sought after, by the way? Because one would think, oh, there's lots of rock on the whole world is just a rock. You can't dig a hole in Colorado anymore because of their political system. You can't dig a hole in California. You can't dig a hole in Oregon. It's very, very tough to build a quarry these days. And we just, by de facto of our permit to mine, have an entire quarry component to it.
Is that something you want to publish some kind of a study on, or incorporate it into your FS, or something that you can kind of put some numbers to what you're saying here?
We're going to have a standalone report at some juncture on the waste material, because it's not just the waste material associated with the mining of the ore. We also know that the ore body is larger than what we have in our reserve report. But ultimately, I think legacy, post our production of Copper King, the mineral deposit, it will probably continue to deliver aggregates potentially into the Colorado Front Range and into California, and as rail ballast for BNSF long after the mining operation is finished. So, there could be several 100 million tons for $20 rock there. It's a remarkable side story.
it is an interesting part that I would like to see some numbers around. That's why I'm asking here, Luke.
And
Um,
yeah, and that will be coming. But again, none of that is economically factored into any of our pre-feasibility study. As you know, I just want to reiterate that
yeah.
for people listening. It's a bonus.
Hmm. Well, that's so one part was the metallurgy that we just touched upon here, and then oh, that's also a good side note to talk about the waste rock here. But the second part that I said was permitting, partly because you're close to, as you mentioned, to the Kurt Gowdy State Park. As far as I understand, it's kind of a recreational environment. Any
It's
conflicts that you have
beautiful.
to
It
keep in
is a
mind with?
beautiful little park. Yep, with two man-made lakes in there, Crystal Lake and Granite Lake.
Mhm.
Crystal's only about a mile and a quarter from our mine site, I'll call it. I won't even call it a proposed mine site anymore. We just haven't started digging the hole yet. It's only a mile and a half. So when I first went to site and I looked out, I could see from the top of our hill just cascading park in the very near distance. I was like, oh, this is going to be a really big challenge. How are we going to
Mm.
convince people that this project is not going to be overly impactful? It's not going to impact the park in a negative fashion. So that wasn't my job. That was George's, right? So George has spent years with Barrick earning trust from people and garnering social license, particularly in South America at the tail end of his career with Barrick, right? So when we came into Wyoming, the first thing we wanted to do was one, get an understanding of how we could do it that would have the least amount of impact on the surrounds and on the community, but then explain to the community and the local people how we were going to achieve this. So we had a website set up that was just for the local community, and it explained the style, the manner of production, exactly what we were doing, how we're extracting ultimately our concentrate, the impact on traffic, the impact on visuals. All that stuff was important. Well, the way our pit shell is designed is within about 6 months, you're working below a ridge line, so there'll be no negative impact from a visual perspective from the park after about 6 or 7 months. And prior to that, we'll be putting up fence work, the cloth along the fences, lines and such, so that there'll be no real bad visual impact. We also did blast tests to check out the impact of noise and vibration around the area, and we put all those studies out into the public domain immediately. So we constantly had town hall meetings, bringing people in, showing them the 3D imagery that we had, that this is what you'll see from the park. Then, as it turns out, we started to learn more things about Kurt Gowdy State Park. And one very big part is those two man-made lakes, which are very highly used recreational sites as well. They have RV hookups, campsites, public washrooms, bike paths, roads, parking lots, the whole gambit. Well, those two impoundments don't actually contain enough water for the future of Cheyenne, because Cheyenne, of course, like most cities in the US, is growing. So the Bureau of Public Utilities in Wyoming, their intent or their plan was to increase the dam heights at these two lakes, and that by proxy would have flooded the recreational sites in the park. Well, and that plan, which was going to cost somewhere in this, somewhere between 100 and 200 million dollars. I can't give you an exact. That's just a kind of an estimate. Um, was going to add about 30% more water capacity. Well, we have this benign rock, this hole in the ground that we're digging right next to the state park. So ultimately, the future of Copper King, the way I see it right now, and the way I think the state and the community is starting to see it too, is it's going to be just an extension of that park. And the post-production pit would add, it's 80 acres around its surface, and it runs 700 foot deep. It would more than double the current water capacity. It would save them a massive make work operation, and ultimately it saves a park. So, it is such a unique tremendous story, just how this project's going to keep giving back to the community by way of taxes. It's the school board, kindergarten through grade 12, that actually own the royalty on the project. They will also benefit from any aggregate sales. And then ultimately, it's going to be a lake tied into their water reservoir network, but also tied into the wind farms behind us, where it'll be used as a pump storage facility. So it's, you just don't get a better kind of feel-good story than Copper King, I think.
Would the state pay some of your work because of that? I mean, that'll kind of make
We
sense.
are exploring um, a, a system in place within the state of Wyoming where they will put up to 50% of capex by way of a municipal bond. So they'll assure the debt. So then you get very, very obviously low, basically LIBOR debt for up to 50% of that capex. So we are discussing and exploring that with the state. But, I made a comment very early on when we first started talking, Antonio, about, well, it was when you asked me if we were planning on developing this project, to which I answered very much yes, is because we have the right stuff in the right place at the right time. And the right stuff being two critical minerals, copper and gold, are now critical minerals in the US. The Trump administration have gone ahead and brought gold and copper into the critical minerals category. So now, and they've asked the BLM and others to speed up their processes because they are bureaucratic messes, disasters. We were fortunate enough to be on state ground, so we dealt with the state of Wyoming. It's just as arduous a process as it would be dealing with a BLM and a NEPA and all the different federal agencies. But there's people that show up there to work in the morning who can make a decision. At those other bureaucracies, not so much. So anyway, we've got one of the only permitted, ready-to-go, shovel-ready projects in the US right now, and a federal government who's pushing hard for infrastructure plays and development. So we're going to start talking to the feds as well. I think there's a lot of federal grant money as well as federal loan potential, but also because of that kind of safe haven environment that we're in, we're in a state that's already pro resources, pro harvesting resources. Now we've got a federal government that's pro that as well. It's really opened up the pathways for a lot of different sources of funding that we probably would not have had back in the midst of the ESG, DEI kind of government system that was in the US previously.
When you first proposed the project to the state parks committee, did they raise any particular concerns in terms of sound or anything else that there might be?
I don't want to overstate this, but it went from shock to awe. No, it went from like, what? You want to do what? To all of a sudden, hey, hang on, that could solve this Bureau of Public Utilities problem with the two reservoirs. It's not going to be heavily impactful. So fast forward to, we did not just a permit to mine, which was in the public domain. We also did an industrial sightings permit, which actually delayed a permit to mine while we did it because it's over a $250 million capex. What that does is it frees up the county to deploy capital, such as putting in fire hydrants, maybe bus stops, just them being able to deploy infrastructure around our project because obviously it creates jobs and taxes. Well, as everybody started to realize all the positive impacts of what CK is going to have on the community and the benefit it could represent to the park, we ended up with zero formal objections to this project, even with its location to Kirk Gowdy State Park.
And that's final. Like it's not like someone could turn around tomorrow and change their mind and create a bigger issue.
Right. And we see that. And federally, that's an issue. On federal ground, that's an issue. On state of Wyoming, through the process we went, it's not lawful for a third-party NGO to show up and change their mind and decide they want to. It's under, again, state of Wyoming law, it is not lawful to do so.
What then is left for you to get in terms of final permits before you can actually start digging?
Antonio, if you're so kind as to send us $277 million from your bank account to this afternoon, we'll start digging tomorrow.
Well,
We are fully permitted.
that would only leave me with a negative $278 million bank account. So that would be interesting here. What is so it's completely permitted, nothing else in terms of look water you mentioned. What is where's your water come from again?
Okay, so we've got two or three different sources of water. Ultimately, sorry, the water is coming from the Bureau of Public Utilities,
Yeah.
the same source water that we were discussing. However, we were asked actually to harvest a different water field on behalf of the Bureau of Public Utilities and run it to our project. We're exploring the final mechanisms of achieving that right now. Plus, of course, we've got a major water pipeline just running right in front of the project from Crystal and Granite Lakes to the township. So we have multiple accesses to state water, and we have a water agreement with the Bureau of Public Utilities. So very fortunate in that regard.
Hmm. Um, and that doesn't take any additional permitting because that's essentially what I was wondering here.
Yes, no additional permits required
Right.
for Republican.
To switch the topic here to financing, or go back to talking a little bit about the financing, so that there's
Certainly.
other opportunities with the state and everything. Um, I also saw that you've signed a non-binding LOI for balast sales. How close is it to it actually being final?
So what you're referring to, I believe, is the non-binding LOI with Burlington Northern Santa Fe,
Yep.
the rail company for rail ballast. Yes.
Yep.
So just to to inform your listeners and people who are watching this today, uh, rail ballast is a very high spec form of aggregate. Okay, it's about 2.5 inch minus, so about this size of rocks, busted up, and it goes underneath the rail sleepers and rail lines throughout the world. Right, that's what rail lines are laid on top of. So the last thing you can have is thousands and thousands of miles of rail line running near all these drainages and creeks and near people's homes, having rock that leaches out, insidious or dangerous chemicals into the soils and waterways. So it has to be a very, very clean kind of rock. It also has to be certain density. It can't retain too much moisture because it can't get too heavy and sogged and waterlogged. It has to be able to handle a certain amount of impact, of course, with rail running over it all the time. So you go through 5 tests that are done. We did so. We did those tests independently, and then we took some of our rock. We gave it to BNSF. They also conducted tests on it, and it ticked every box. So yeah, it's a very, very good form of rail ballast. So right now, BNSF, to get rail ballast in the local area, they have to hand machinery over to Union Pacific, who's their competitor, and Union Pacific roll into Martin Marietta's mine 2.5 miles or 3 miles to our south. And that's how how BNSF get their rail ballast. Well, that doesn't satisfy them. So they've indicated to us that they would like to get a rail line to us, and they would like to acquire at least, they said minimum in the LOI, minimum 400,000 tons per annum of our waste rock.
Right. Would integrating aggregate and ballast sales with concentrate production result in operational complexity for you in any way, or is there a way to kind of manage that?
So, so a concentrate, we'll have 10 different off takers lined up at our gate, begging us to sell it to them, right? Like I'm not sure if you're familiar, Antonio, but there's a real shortage, especially with a good quality copper gold concentrates. They're very hard to find right now. In fact,
Mhm.
some of the bigger companies are actually paying a premium to get the right stuff to offset some of the lower grade materials that they are receiving currently. So that's a pretty easy business. When you've got people lined up at your gate saying, please sell it to us. No, sell it to us. That's great. So that's copper gold concentrate. Aggregate's not like that. Aggregate is a relationships business. It's big company business, and you've got to market and you've got to sell it, and you can't You can't just overrun a market with too many tons of aggregate. You're just going to dilute it, dilute that market and kill your own bottom line. So we don't specialize in aggregate and aggregate sales. So for us to try and become, for me to sit here and tell you we're going to try and become a materials company would be foolhardy. What we do want to do is partner up with one of the big boys. We've already got a big rail company that wants in there. If we can find a big one, a competitor to Martin Marietta, we already got a competitor rail line coming in there, then it becomes their business. It's their business already, so it just becomes their business. And we can either get paid up front for that rock, we could get paid in conjunction with their sales, or ultimately, and really this is the only way to look at it from my perspective, is we can use that to just bring down the cost of production at the mine. And bringing down the cost of production just adds to better profits, better bottom line, and higher share price for our investors. So I think the simplest form of utilization of that waste material is exactly that: cutting a deal with the right company, big earth mover that can maybe deliver us all for free, or whatever the negotiation ends up being.
As far as I understand it, you're expecting to have an FS by mid this year. Is that right?
Correct.
When are you going to have more definitive or binding information on the ballast and everything else around it? It's
That's
going to be
why, look, we could probably have well, not probably, we could have a feasibility study way before that. But we want, again, we're doing the Jamison cell work right now with Glencore Technologies. We are looking at some other optimization ideas around the concept or around the project that I won't get into the weeds on. There's no point, because unless they pan out, it's just a waste of time sort of mentioning them. But we're working on other optimizations, and ultimately we are exploring what we can do with this huge bonus of this high spec, waste rock that is associated with the project. How do we maximize the impact on that for our shareholders and minimize the impact on the surrounds? That's what we're doing right now. So we're doing that work nice and quietly from our offices in Cheyenne, exploring all the options around that so that we can have some more exciting news for the marketplace.
Talk to me more about the strategy behind going from PFS to FS that quickly, especially in the context of you believing that there's more upside potential here. Why not go and drill a whole bunch more? I mean, I understand you wanted to prove that there's something, stick a number to it for the PFS.
So we are going to show additional upside. And there is actually, if you look at our presentation material, it shows about 300, it says 300,000 to 1,000,000 ounces of additional upside. So we're going to shore up those numbers. It will only be a resource, though. We're not going to bring it into a reserve category. Why? Because it's probably 30 million US or so to drill it off and to do so. When it's there, and we know we'll get some value for it by shape of a resource. I've seen one banking institution came to us and said, you add 1,000,000 ounces to this, it adds $1 billion to your NPV. Because why? Well, we've already paid for the infrastructure. We've already built the mine down to that depth. Another 1,000,000 ounces on it is actually worth a heck of a lot to us. So we are going to we're going to harness that by some way, shape, or form. SK 1300 is different to NI 43-101. It's actually a little bit more stringent and more difficult to talk about, resources per se. But we are exploring all of that because we want to bring all the value we can to the headline right now in the company. Obviously, why? We want to have a positive impact on the share price, higher share price, less dilution, and we can get into building this mine.
How much money do you have to spend before the FS is out?
So we have an estimate that's somewhere between $1 million and $2 million, and it is probably the lower of the two numbers because George and his team did the engineering to the umpteenth degree through the pre-feasibility. Really, the actual bankable final feasibility is spending some eyeball time directly with the myriad of different construction partners that the project will require, and actually getting quotes out of them, final agreed upon quotes out of them for construction of the site. So we know who we're dealing with. We know pretty much the cost of everything. There's no more drilling or again, additional engineering that needs to go on. So it's quite a inexpensive undertaking for final feasibility.
Mm. You had, as I mentioned earlier, 9 million bucks at the end of January of this year. What do you have now? Like 6, 7 million bucks?
We still have about nine. We had a little bit of warrant money come in, plus our overhead is really cut back. And this is something that I really want to implore to people because I sometimes forget this point, and it's a really important point. So we talked about how many shares we have out and the warrants and a fully diluted stock, right? We've raised $47 million US to get us to this point. We don't need to raise another $47 million. We don't need to go out and drill anymore. That money's been done. That dilution has occurred. The only next event around this company is developing the project. When we go in for the $277 million, so let's call it 300 million just for sake of conversation. Now, the vast majority of that money is going to be debt, but we're starting to think that there are some very non-traditional sources of capital where we are going to be able to greatly reduce the amount of equity dilution that's required to put this project into production. Now, why would we be so motivated as to want to minimize the equity dilution on the company? Because we're all shareholders. We are aligned with our investors. So the investor community that are out there looking and considering an investment in us right now, again, just know that you are aligned with management if you own shares in this company, and we want to minimize dilution and maximize our share price.
Well, you said you still have 9 million bucks, but I mean, G&A is a running expense, but is about 800 something over the last reported 9 months. Is that where it has been, or because you said
It's much
overhead is
lower
cut
than
back?
that now, but it depends. Like we're in a bull market cycle right now, Antonio. I think that's safe to say. Certainly from the metals prices, obviously we are. On the equity side, it's been a bit laggard. I think you would agree with that the equities have not really kept pace with the metals. I'm feeling that that's changed. So we as a company, we just had our board meeting on Friday of last week. We all got together in Denver, Colorado. We're going to put a little bit more impetus on marketing this story and getting the story out there. So we run adverts on CNBC and Fox News, for example. We want to maybe do a few more of those. We're going to get out and travel a little bit more and go and meet investors in the US. Plus, we want to do some, digital marketing and other forms of just getting our story out into the US because got all the right things, the right place, the right time. You've heard my spiel there. So we'll probably will pick up the burn a little bit, but it's just to increase awareness in our company and really get eyeballs on us. From a hard cost engineering, drilling, etc., kind of a perspective, there's not a lot of dilution left on us.
How much money do you want to spend on marketing this year?
Well, I'd like to spend as little as possible and get as much as I can. I don't know. We're just working through sort of the final kind of ideas on that, but we're mindful of the fact that we need to get this story out there right now.
So where would that place? Is there kind of a target for the G&A that you want to target on a per month basis, or how much money do you want to spend on non-technical expenses?
Well, I mean that includes a lot of things as well too, right? Like consultants that we have currently working with the company, etc. But I mean, I'd like to increase the spend by at least $100,000 a month or so minimum to in terms of actual really trying to get this story out there.
So it's going to put you to about a million US a month. That is in terms of burn.
Yeah, but I think that number is high because remember our engineering costs and everything are actually coming down. But then we do have the pre-feasibility study of, sorry, the bankable feasibility study. So yeah, actually, you know what? I'll say that's pretty close to accurate. If we go all the way in, if we include feasibility, we include a ramped up marketing focus, plus the other bits and pieces we're doing around optimization, I think that's a fair estimate. Yes.
So you're going to be looking to raise capital on the back of that feasibility study and not before it. Essentially, that's what I was trying to get at.
We get well through the end of this year off our current treasury.
Okay.
Plus, what we have been doing is we've been seeing a little bit of warrant money coming in as well,
Hmm.
Antonio. So, we continue to have warrants in the money. As you mentioned, the stock's trading around 10.50. There is a $6 warrant still out there. So, look, if they come trickling in and that just satisfies a good chunk of our burn, that would be tremendous also.
Hmm. Let's talk about how you plan on financing it on the back of that bankable feasibility study. You
Yes.
said that there's going to be debt, there's going to be equity. You said non-traditional financings. What would, in an ideal world, what's an ideal financing package look like here?
As little equity as possible, as much debt as plausible. Um, you know, the old ratio was around 60-40. It's since shifted to around 70-30. That's debt 70%, equity 30%. Um, I, I'm I'm feeling confident that we could even start to get in sort of an 80-20 type scenario with a project like this. Or if we can just garner the attention and interest of the federal government in the US, then all bets are off. They might not require very much equity at all.
How, who finances a mine with this profile? Essentially, is what I'm wondering here. I mean, and who do you go to? Is there a royalty and a stream option that you can go to someone like Wheaton? Is there a pre-sale of material that you can do that could help you out? Where if you could get
Yes,
more specific about what
yes,
what you're
and then
currently
off
working on.
takers. So the other one is
Yeah.
off takers. So there's a myriad of off takers out there. The people who I told you will be lined up at the gate wanting to buy our concentrate. Well, they need the mine in operation to be able to buy a concentrate. So they're willing to put up their own money by way of debt. Um, so again, yeah, you nailed it. Like the Wheatons for the royalties and streams. There are, and then other companies alongside of them, the off takers as well. And then there is forward sales, potentially our highest grade and our biggest production year is year one. Okay. We put out about 136,000 ounces of gold, 24 million pounds of copper. So to forward sell some of that, to alleviate some of that, it's not pure equity at that point, but to alleviate some of the costs of development and production is obviously definitely a consideration also.
Mhm.
The
Is that
real trick here is going to be getting through this debt servicing package, building up a very friendly to our project, friendly to our company financing package, and not have somebody come through and just try and take us out. Because, again, we're one of the only shovel-ready projects in a junior in North America. And once we show a pathway to uh, low or non-dilutive financing, this project just gets more and more valuable.
do you feel like that's a plausible risk here? I mean, is that do larger companies
Oh, I
approach you and want to
absolutely
come and
know it
look at your
is.
stuff?
I don't feel I know it's absolutely a plausible risk. But look, it's not always a bad thing either. I mean, if it's the right company with the right projects and that our, 1 + 1 = 5, these things really do happen. You get the whole big re-rate scenario. We may be open to discussing it, right? I mean, it just depends on who it is, when it is. No one wants somebody's overpriced paper. Uh, you know, we're we're very aware of who's out there, who's interested, who's looking, and we just keep our eyes on the focus on the finish line, which is developing CK.
When do you want to have that final financing package by? Is it the end of this year? Or is that something for early
Yeah,
next
before the
year?
end of this year, we'd like to see that
Hmm.
completed. So again, we've got a little bit more optimization stuff to do. We are talking to everyone already, obviously, and a lot of all the lenders are aware of who we are and what we're doing, and we've even had a few term sheet presented to us in recent days, but we've got a little bit more work to do on our end to ensure that we can get the best deal out there from our perspective, excuse me.
What about The other two projects, might as well touch upon them. I know we don't have too much more time left here today, but you've had Keystone for a while now with nothing needle moving coming out of there, so to put it. Why why is that? What's happening? Are you going to do anything at all, or is it just
Keystone
CKCC?
is my favorite project out there. It will probably dwarf everything and anything we've done at CK. When we really get a hold of it, when we get to go in there and start again. So I told you the brief history on it that CK was actually the reason why we started US Gold Corp. Um, the geologist who brought it to us, Dave Matheson, is the same guy who had worked on railroad with us over at Gold Standard previously. And what Keystone is it's a standalone domal district, which is very important. Okay, the lower plate rocks that hold these big gold deposits, these Carlin style gold deposits in Nevada, are very deep. Traditionally, they're very, very deep. But what happens? You get these intrusives that come in, magma bodies that lift up the lower plates and thrust them up through cover and close to surface. So that's what existed along the Carlin trend. That's exactly what occurred there. A 50-mile long crack in the Earth's crust that ultimately forced lower plate rocks close to surface in three different windows along the Carlin. Well, we're on the Cortez trend, and it's the same thing. So our neighbor is Barrick, who own the Cortez complex. Now, the Cortez complex is now their flagship set of projects. There's about 60 million ounces of gold and growing within the Cortez complex. It has a certain kind of rock type, which is called Wenban number 5, that is altered by multi-pulse intrusive systems, intrusives that were there that generated these very rich gold mineral systems, both high sulfide as well as oxide. The geology is very unique about Cortez. Well, we've got a mirror image, a little sister mirror image of that same lithology, geology. Everything is there. It's got an arsenic cap there or anomaly, which is the highest grade anomaly of arsenic that any of the geologists I've worked on that have worked on this project have ever seen in Nevada. And whereas the arsenic is the gold in Nevada. So we did get to drill 6 or 7 holes. Actually, I think we drilled 8 holes during our scout exploration programs back in 2006, 2017, 2018. And what we hit was swaths, like 1,800, 2,000 feet intercepts of Wenban number 5, close to surface, heavily altered, indications of arsenic byproducts like orpiment, realgar, all the things you want to see, all the right earmarks you want to see in the biggest gold systems in Nevada. If anything, we feel that maybe those holes were just drilled a little too close to the intrusive and the gold had just been cooked out, but all the arsenic was still there and present. So we want to go hunting for elephants, Antonio. That's what we do. Right. So at some point, that's going to be spun out, and that will be it'll be under its own dilution. We'll get in there. We'll get some very smart minds and some smart wallets behind us, and we will go in and we will really give Keystone a real modern day systematic exploration focus.
When do you want to have it spun out by?
Um, I right now our focus is just primarily CK. So if I spun it out of the company right now, all that is going to do is dilute my time, George's time, um, Eric Alexander's time. It's really a matter of time management. Now, when CK, the shovel's turning, um, production's underway, not even production underway, sorry, development is underway. That's when I could probably shift my focus over to a Keystone and around then. So,
Right.
in the next 12 months, I'd like to say.
Okay. So it is, I mean, it's not something for way down the road once you're cash flowing, something like that. That's
No.
actually a good indication. What about Challis? what's happening there? Is the plan still also to
Unfortunately
spin
for
it out?
Challis, you're the third sister. You're the third one in line. Look, I really very much would like to get in and do some exploration. Idaho has really started to open up. We can see Perpetua and others that are, doing remarkable work. Um, I Unfortunately, Challis is going to have to just continue to wait in the wings until we can finish what we're doing at CK and get started at Copper King. But sorry, at Keystone. But in saying that, look, in a bull market, who knows? All bets are off. We'll spin those two out and raise a bunch of money. We've got access to some great geological talent. Nevada, you know, you don't want to go exploring in Nevada for Carlin style mineralization systems without Nevada geologists. They're the only ones who know how to do it right. So,
Yeah.
we'll build a team around it when the time is right for sure.
I want to talk to you, Luke, about why you're listed in the Nasdaq in the first place. And maybe you can talk to me more about your experience in being listed on the Nasdaq, given that you yourself are from BC.
Mhm.
You've run companies now that are listed in Canada. So why does it make sense for you as Gold Corp to be listed on the Nasdaq?
Well, so we'll take a look back to answer that to when Jonathan Ord and I started Gold Standard Ventures. We floated that on the Toronto Stock Exchange. It was about an $18 million. Well, we actually reverse merged it into a public trading shell, but on the Toronto Stock Exchange, around $18 million market cap. That grew and blossomed to almost $1 billion in valuation at its height. Where did most of that attention come into the stock was when I think around 280 or $300 million market cap, we uplisted to the New York Stock Exchange. Then the other thing that happened was a massive transference of ownership as we were listed in NYSE, so we were listed in both jurisdictions. The vast majority of our shareholders became US. So when I had that as a hindsight kind of a variable, I looked at our company, sorry, US Gold Corp, and we were floating it in the US. And I thought, okay, so why do we need any kind of Canadian component to this? We've got, George B is an Englishman with a US passport. All of our geological team, etc., we're all, US based. So it just made the most sense to list it in the US. Ironically, that actually the one thing I didn't see coming was the fact that, of course, that would orphan us from Bay Street for a bit. So we didn't have the analyst coverage that we wanted and needed. But we've since rectified that too. So, we're already covered by a couple of analysts in Canada, and we're going to get some more coverage, I'm sure.
What's the cost benefit here, though, on being listed on the Nasdaq or in the US? Because I imagine it's more expensive. I mean,
It is
in your
more
G&A
expensive.
kind of shows it too. Again, you're thinking about a million bucks a month. That is on the higher end relative to other companies of this size that I typically interview. So I assume part of it is the Nasdaq. So yeah, talk to me about the cost benefit analysis of being listed in the US.
I couldn't give you the exact, I can't give you the exact sort of cost to benefit type ratio or, really break that down because I couldn't say how we would look or how we would be trading if we were Toronto Stock Exchange listed. In the US, with our share structure, we're in a far better territory to have a tight share structure like that with a double digit stock that we are today. American investors understand the prospect of buying a $10 stock, foreseeing it going to 30, 40, $50. In Canada, it's not as common. And in Australia, it would be completely foreign. I made the joke, in the US, we have 12.4 million shares out and we're trading at $10. If we were Canadian listed, we'd have 124 million shares out, we'd be trading at $1. And if we were listed in Australia, we'd have 400 billion shares out.
That's just probably about 1.2 billion, and then you'd be trading at whatever 10 cents or whatever it might
Yeah,
be.
exactly. Yeah.
Don't make me do math. It's late for me. I might faint. But
Yeah, I
it
understand.
what is the how are you finding Canadians' receptiveness to actually buying a $10 stock? That was interesting to me.
It's
Ten
it's it's
seventy
hard. I
two.
mean, the most sophisticated investors are the likes of an Eric Sprott. It's not even a consideration for him. He gets it. It's
Hmm.
you're looking at market capitalization, and let's look at market capitalization. I think you said we have 124, 126 million dollar market cap today in that realm. Um, you run our baseline numbers, and you said I think our MPV was $386 million or something in that realm. Um, in a normalized market, where we are right now as a in a tier one jurisdiction, with a shovel-ready, fully permitted project, they used to trade somewhere between zero point 0.6 and zero point 0.8 of that number. And I would say because of our jurisdiction, because of our low capex, etc., we should be trading closer to the zero point 0.8. But let's even use zero point 0.6. Zero point 0.6, we would be a $200+ million market cap right now in any kind of normalized market. $120 million market cap on this project is simply a little bit of a head scratch. Clearly, the chairman isn't doing a good enough job out marketing the story or something. You look at our spot, I mean, it's almost well, at spot it would be $1 billion NPV right now on the project. So, look, I think there's so much upside to this project and to this company. I just think that it's just a matter of time. It's one of those inelastic separations of reality. A project like this, so that got a little bit off topic because your question was, how do Canadians look at buying a $10 stock?
Yeah.
The most sophisticated ones, they just get it. They see $120 million val on us today, and they're like, this is still grossly undervalued. There's a lot of upside.
Hmm. With the marketing or looking for new investors out there, what's kind of the ideal profile of the person you're looking for? Are you looking for US funds? Are you looking for Canadian retail? Are you looking for American retail? Who are you really looking to get into the story?
American retail and generalist funds is what
Hmm.
just matter of factly, that's what I've been kind of focusing my sights on right now. Why? Because the US have just come to the realization that copper is critical, that gold is critical, that mining is critical to any sensible economy. And I just think that those people need to be aware of who we are, where we're at, and the benefits of this project and this company. And I think we'll start to realize more of our value metric because, again, I do believe we're very, very far south of where we should be valued right now.
And I understand you've come to present a bullish case, and that is as you
Yep.
noted, your job as chairman. What keeps you up at night, though? Nothing's really ever perfect. So if you had a magic stick, you could just wave it at something, make it go away. What keeps you up at night?
To me, it's the only thing is volatility in metal price. The broader markets, that's not over yet. The broader markets are probably going to head lower. There's a concerted effort to try and get interest rates down right now
Mhm.
for the Trump administration while they refinance their debt. That's going to have a negative impact on the broader market. The broader market, gold follows it, but I've also witnessed now three of these major cycles. The big one, the first one being, sorry, the dot-com bust, boom and bust, 99, 2000. Gold followed, $253 an ounce. That was also during the Brown trade where Brown dumped all of England's gold. But then gold decouples from the broader market and it goes the opposite direction. Heck, look back to 1929 and the Great Crash. The proxy for gold, because gold had a fixed price back then, was Homestake mining. And Homestake rolled over with the Dow for the first 3 months, and then it decoupled, and Homestake went up 600% while the Dow continued to lose 90% of its value. So I'm not worried about the broader markets. That didn't give me a head fake or a headache at all. But I do worry about this. The only potential concern here is the price of gold. Because if gold rolls over, it's just this project will still make money. We'll still be in the game. But what will happen is we'll lose these investors who are just showing up. And I don't know. my business is a lot more my job is a lot more enjoyable when people want to take our calls. They want to meet with us. It's just more enjoyable, more exciting. And lower metal prices would steal that away. So that's the only fear I have.
Company wise, though, what do you think is the biggest risk? I mean, nothing's really ever risk free. Definitely not in mining. Things often do go wrong. What's the biggest risk for you as Gold Corp specifically?
Um, I'm at a blank. I mean, if you could have asked me, if you'd asked me this a year prior, it would have been, oh, are we going to get our final permits? Are we going to get this? Are we going to get that? We have all of it. You know, the debt to go into production is just a negotiation. There are people who are very, very proactive in wanting to lend us money. I can only, again, tell you that the only potential headache would be a big turnaround in the metals prices. Other than that, nothing keeps me awake on this project.
Right. Let's pick it up in a couple of months, hopefully here, Luke, once
Yeah,
you have that final or bankable
feasibility.
feasibility study and then maybe a final investment decision at that point as well, a financing package or something like that. It's been a pleasure speaking with you today. What am I forgetting to ask you though here at the end? What did you come here hoping to talk about that I failed to bring up?
I think we covered all the bases, Antonio, and if we didn't, we'll definitely do so next time we
That's
catch
right.
up.
And I'm sure I'm missing something here. So for people listening and watching, please let me know what I'm missing. And then next
Mm,
time when Luke's here or when George's here, maybe
yeah,
George will join us for a conversation as well. We'll get to it. So thank you so much for your time today, Luke.
yeah, thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."